Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today we're taking a look at two stocks, Trinidad and Tobago NGL Limited and the CLICO Investment Fund, or CIF. For the year ended December 2017, TTNGL would have generated quite significantly positive results over its last comparable year in 2016, while CIF has been somewhat of a quandary to investors. Is it a buying opportunity, or is the stock price telling us something about the underlying assets? Let's take a look first at TTNGL. And for the year ended December 2017, TTNGL reported earnings per share of just about $1.51, a substantial increase of about 30% over the December 2016 performance of $1.16 per share. Contributing to this improvement was an increase in share of profits from its sole investment company, Phoenix Park Gas Processors Limited, which is a company that's focused on processing of gas as well as fractionating and sales of the fluids from the gas, namely propane, butane, and natural gasoline. And we can see here that there was a 32% increase in a share of profits from PPGPL from just around $164 million to just about $216 million. And the dividends per share, both in 2016 and 2017, remain stable at just about $1.50 per share. Let's dig a little deeper into what caused some of this positive performance. And as we can see, one of the major impacts in terms of improved performance was an improvement in the natural gas liquids price movement. And that was a 50% or 58% increase in propane prices, as well as a 40% increase in natural gas and butane prices. On average, the weighted basket of natural gas liquids prices that is produced by PPGPL did increase some 39%, from about 68 cents per gallon in 2016 to just around 95 cents per gallon on average in 2017. Also generating a positive impact was an increase in the exports of NGLs from PPGPL, and in total, NGLs or natural gas liquids total exports would have improved from just around 8 million barrels in 2016 to just around 8.5 million barrels in 2017. And we can see that butane exports would have increased from 1.38 million barrels to just around 1.75 million barrels. Propane would have increased from 3.01 to 3.28 million barrels. And there was a marginal decrease in natural gasoline exports from just around 3.6 to 3.52 million barrels. So product prices and improvement in exports all contributing to improved performance for TTNGL. How does the stock stack up against its competitors? Well, it is the only stock in the energy sector, on the energy sector of the Trinidad and Tobago Stock Exchange, but it is one of the highest dividend yielding stocks on the Trinidad and Tobago Stock Exchange at just around 5.4%, and that's at its current traded price of just around $20.02. So on the basis of a very attractive trailing dividend yield, its implicit hedge to investors in terms of its generation of US dollar earnings and its mitigation of any negative impacts of a TT dollar depreciation, and its very strong cash per share position on its balance sheet, which is just about $2 per share, Bourse maintains its buy rating on Trinidad and Tobago NGL. Turning